Hey guys, Dan with Ninjacators here. We're going to run through a couple of markets mid-April to assess where we're at. We've got inflation on the rise, rate cuts in limbo, war breaking out in the Middle East, the dollar soaring, and all that cranking up volatility across the markets. We'll jump into that here shortly, but first, if you're looking for another edge in your futures trading, look no further than Fast Track from Ninjacators. Live trade rooms, funding, software, and Discord all rolled into one package. Take your trading to the next level. Check out the link in the video description below. Okay, let's jump into the S&P 500. If we go back to the beginning of the year, we have this nice trend channel here that you can see this bottom side of. That price is respected once, twice, almost three times, and then broke here Thursday the 4th. Got a clean break, clean close through it. And then after today and last week's activity, it's unmistakable that we are officially on that roll to the downside here in the short term. Is this a healthy pullback from a year's worth of a rally or something deeper due to rate cuts and wars? We don't know, but it's unmistakable that all the indices have really kind of followed suit on this. If we flip over to the NASDAQ, you get this same rotation. It's not quite as steep as but we did break this range low here today. We got to close through this 18,070 range low right here. Pretty convincing close. Another structure level coming up here at, what is this? This is 17,619 on the small caps. You kind of have that same price pattern going on, this downtrend happening. We took out this little swing low right here on Friday, and now today we have continued down. The next swing low of relevance is this 1950, is that next stop down on this rotation. Now we have been in a trend channel here for quite some time on the Russell, so there is a little bit more meat to the downside here before we really truly start to break down on the small caps. If we flip over to the Dow, you can see that this is the loss leader here has been took out this range low here on April 10th, and then the rest of last week was just confirmation and continuation to the downside, which took place again today. The next low on here, 37,725. We lose here, things can get real ugly real quick. Let's flip over to crude. Crude, with missiles firing over in the Middle East, you'd think that crude would jump and start to skyrocket on the day. Didn't happen for whatever reason, and we kind of just maintained inside this price channel here between 84.51 and 87.66. Let's flip over to Bitcoin. Bitcoin took a big dive today out of its bull flag, and dropped to the bottom side. Took out that bottom on Friday, continued to the downside here, about to test these lows of 61,530. So that's on the downslide. Gold popped right back up after Friday's shooter candle here. We're now back up to that 2,400 level, looking to go back up and retest these all-time highs at 2446 potentially. If you flip over to the Euro USD dropped pretty hard today, and looks like it's going to possibly retrace a little bit, but I would look for that continuation down to possibly retest this 56.35 level in here. And if the Euro USD is dropping, that means the dollar is soaring. You can essentially just take this chart, flip it up on its head, and you'll have the dollar chart. So that means the dollar is skyrocketing here as of today. All that said, you flip back over to the S&P, kind of the bellwether here. All that said, you could possibly look for a short-term pullback here coming tomorrow. But ultimately, with the technicals pointing the direction they are, I'd be more on the outlook for selling to continue down to that 50.85 level and kind of retest this high end here of this gap right down here, 50.85, and then I would look for that 50.22 level down to that 5,000 level, even if things get pretty rough here in the next few days. So that's it for the week's outlook. For more in-depth analysis, live trades, funding, and an indicator warehouse to suit your trading needs, check out Fast Track. The link is in the description below.